I think it's timely that you agreed to um, join as a guest in the podcast because, um, it's an election year in the U.S. and it just so happens that there are over 66 elections going on across the world today. Actually, not today, but over this in 2024. Interest rates remain high, inflation is persistent, not only in the US, but in other countries. Two wars continue their course. It appears that the US has made a soft landing and we're going to avoid a recession. What are you observing in the merger and acquisition markets that there may be risks and opportunities with this backdrop and during this month of March? Mm-hmm.
Yeah, so, last year, the M&A market definitely was down significantly globally. And a lot of that was driven by a very fast increase in interest rates.
Yep.
Very unprecedented. And, that just causes uncertainty. It also causes financing costs to go up. And private equity is the big driver of the M&A market. And, it costing them more money, it's going to basically reduce, multiples that are paid for companies, which then puts these sellers on a holding pattern. But what has happened, and it started happening, last fall, is with interest rates starting to stabilize, and now people are looking to, in the future, that hopefully to decline, is the market is stabilizing, both on a volume basis and also the multiples that are being paid.
Okay.
And this is just very recent data, but we're seeing it's positive. We're seeing the stabilization. And, in terms of, what I would say in terms of risks to sellers is we're still looking at, instead of 100% cash deals that were, being done, now we're seeing a lot more earnouts.
Okay.
And with earnouts, there's uncertainty. So, our advice to clients is take as much cash up front as you can. And just to talk about earnouts, that's basically compensation that you will, or consideration is a better way to say that, for your company based on future either revenue or typically EBITDA milestones that the buyer is going to set to make part of that consideration.
Okay.
And there's just a lot of uncertainty with that. So what the good news is that there's still a lot of money out there. There is 2.6 trillion just in private equity money. And because interest rates, borrowing costs are stabilizing, we are seeing, as I mentioned, the multiples starting to stabilize. And, so what I would say to a CEO or an owner is know your cash number.
Okay.
Know what you want, because the earnout may or may not happen. And what we have actually done in certain transactions is negotiated a lower total transaction value, but a higher cash component, because the seller, their objective was to make sure that they absolutely had that, cash number in their mind. So I would encourage people to help find that number is to talk to your financial planner and find out what it is that you would, when you do sell, what do you need? Because that will help you well before you get into any negotiation, or have representation in that negotiation in terms of what you actually need.